And welcome to the Protagonists. It's a Monday. Nice to have your company. I hope you had a great weekend. Now, our topic today, we've done this before, prosperity or poverty. How banks determine the national fate. And we did this last week, and I have to repeat the adage that should be applied to our central bank or banks. Insanity is doing the same thing over and over again and expecting, of course, different results. Sign of madness, isn't it? The time really has come, though, for the public to acknowledge that our governments, our central banks, and the banks have been wrong all along. And it's time to change tact. Central banks are shrouded in secrecy. Many are privately owned, and they are pretty much, as we would all agree, unaccountable. Now we ask again, could prosperity for nation states and the bulk of the population be quite achievable if our central banks and governments were accountable? If retail banks were directed to lend more to productive investment and small businesses? What should be done with housing to burst the gigantic bubble? We probe these questions further and others such whose interest the mandatory shift to digital currencies and inevitable CBDCs serve. With total control of our financial lives already upon us and more shut out of a prosperous future, does it have to be this way? Martin North is Principal of Digital Finance Analytics. Vicky Price is Economic Advisor and Board Member for the Centre for Economics and Business Research. And Robert Barwick is National Chairman and Australians of the Australian Citizens Party. Thank you very much for joining us. Can I ask you, Martin, central banks, are they an impenetrable cabal?
Well, they have their own internal logic and world order, but they aren't actually working necessarily in the interests of ordinary people. And whilst they say, yes, we're interested in getting inflation down and all of those things, the truth is that they've got a set of logic that they use where they think the economy is a set of levers and they're sort of pulling these levers, trying to get that inflation down towards target 2.5%, but they never actually achieve it. So in Australia, the RBA has failed over the last 4 years. They are very much driven by what's called neoliberalism. So let the markets rip. We don't want to intervene too much. And in fact, of course, central banks are often not elected at all. They're technocrats, but they are very much connected with the political power as well. So there are these unconnected, sometimes undisclosed relationships. And of course, if you think about the RBA, well, guess what? Treasury is involved with that as well. So yes, there's a bunch of questions about the way that central banks work. They are not and have not proven to be working in the interests of ordinary people and ordinary businesses, and that needs to change.
Vicky Price, what's your thoughts?
I think it varies from place to place. There is no doubt that in many countries you have quite a close relationship between the government and the central bank, so they're not as independent as they like to tell you they are. So in the UK, for example, everyone who is appointed on the Bank of England Monetary Policy Committee, for example, or as governor, has to be approved by the Treasury Select Committee and basically by the Chancellor, so the Finance Minister. So there is a very, very close relationship there, even though they are supposed to be acting as independently as they possibly can. The actual target for inflation, the 2% that we have here in the UK and also in Europe, in the ECB, European Central Bank, and also in the US, is set, in fact, by the government. The one that is really independent and can set their own inflation target is the European Central Bank, which is able to more or less do what it wants from that point of view, even though obviously there are people on the governing body who are all the heads of the various national central banks. So it's a little bit more complicated than what I've just said, but nevertheless. So what you find is that where there is a more close connection between government and the central bank, then you have the government trying at times to put a little bit more influence on what happens, mainly by appointing the right people, if you like, on the various committees. And in the US, as we've seen, there has been a serious issue between President Trump, of course, and the current but outgoing head of the Fed to try and lower rates, which so far the Fed has managed to resist.
And Robert Barwick, welcome to the show, and you've taken my advice well. Thank you. You've now framed it perfectly. What's your thought?
Well, I did catch up with your show last Thursday about banks. And I was interested in that discussion. And one of the things that I would say is because of a lack of competition, private banks aren't really accountable to their customers. They're only obsessed with their shareholders. Central banks, it's like the opposite. Central banks, like the Australian Reserve Bank or the Reserve Bank of Australia, has one shareholder. They're not really accountable to that shareholder. They seem to be more accountable to the private banks that they're supposed to somehow regulate. They serve those banks, and they're not serving the people who own them, which is us, the Australian people. And we've had the Reserve Bank was born in 1959 out of the Commonwealth Bank. The Commonwealth Bank started in 1912. So we've had a central government bank in Australia since 1912. Central bank independence was only introduced in 1996. And what fascinates me about central bank independence and the way it has worked is, I think, best exemplified by a former politician here, John Hewson. John Hewson was as hardcore a neoliberal as has ever run for office in Australia. And in 1993, he campaigned on the principle of central bank independence. He wanted Australia's central bank, the Reserve Bank, to become independent. Now, he didn't win that election, but it was won 3 years later. And Peter Costello, the Treasurer, introduced central bank independence in Australia. But around 2018, it was John Hewson himself who penned an article, I think in the Monthly, saying that, well, we've now had a close to 30-year experiment with central bank independence, and it hasn't worked. That was his conclusion. Because if you look at the actual economy of Australia under central bank independence, what's improved? The banks that it's supposed to regulate turned into these literal monsters that so abused their customers through just mismanagement, misconduct, scamming them, gouging them, etc. It led to, by 2018, it had led to a royal commission into the behaviour of the banks. And this was the brave new world of banking that was supervised by an independent central bank. So even the godfather of independent central banking in Australia said, this has been a disaster.
Yeah, I totally agree. Martin, how can we make the central banks globally more accountable?
Well, I think there are a few observations. The first is they actually have more tools than just the interest rate tool. And this targeting of inflation, whether it's 2 or 2.5%, it's interesting to ask, well, where did that 2.5 or 2% come from? Well, it was, I think, from New Zealand originally. A bit of inflation is good, but too much inflation is bad and too little inflation is bad. They have failed miserably using that particular lever. The second observation is that they sort of regard the economy a bit like trying to fly one of these very complex drones where you have to pull the levers, but there's a lag between what they see, the lever they pull, and what happens to the economy. So they keep getting it wrong. So we need to think differently about what their objective should be. I think the other point there, and Robbie made the link very strongly, they are too much orientated to supporting both the government but also the banking system. And quite often what we see is the central bank is very much thinking about, well, we need financial stability and that's the critical thing and everything else comes secondary. Well, financial stability can cost everybody else if it's actually not done right. And in Australia and elsewhere, financial stability, I think, is a big and important issue, but it's not managed very effectively. So we need to think about that differently. And my final point is, it's interesting when you look at the way the central bank does its job. It takes market interest rates as an input. It takes government policy as an input. It turns the handle on its economic model and says, ta-ta, that's what we think is going to happen. So you've got to ask the question, are they really adding much at all to this? And what about the other tools they've got, lending directives, for example, and things like that? So there are other things they could be doing. But unfortunately, the philosophy of central banking, which comes down through the Bank for International Settlements and through these independent lenses that have been put in place, are failing miserably. We have to change the model.
Vicky, what do you think?
Well, it depends what we mean about changing the model. I mean, first of all, on interest rate targeting, or rather inflation targeting, and therefore interest rates, which has just been mentioned. What the original idea had been was for inflation to stay around 2%, because anything below, you start thinking maybe you're going to get deflation. And when you get deflation, or people think perhaps prices are going to be falling, then you tend not to spend, not to invest. And if you get too high inflation, it was perceived to be sort of over 2% in any consistent basis, then what you do is you get wages to also take off, and then you have a wage push, and that's a real problem in terms of long-term stability, and that also discourages investment and growth. So that's basically the idea. It could be 3%. There's been all sorts of discussion as to whether that should be the case, and therefore ease the job of the central banks. But the important thing is that it wasn't meant to be happening constantly at every point that you look at. It's meant to be a sustainable average. So sometimes inflation could be higher. You don't necessarily need to change interest rates because there are things to do with the economy that you're worried about. And a number of the central banks have also as a remit to look after what's happening to the employment situation, particularly in the US, but also the European Central Bank looks at growth as part of what it's doing. Even the UK has seen, the Bank of England has had all sorts of extra things it's supposed to be worrying about, particularly climate change for a bit. That seems to have gone from its remit, so that's an interesting one we may want to discuss as well. If you add loads of things to what the central bank is meant to do, then that complicates issues. So that's the first thing, and I think we have seen a reaction by commentators and the markets if the central banks, forgetting what they were supposed to be doing, do not raise interest rates fast enough when inflation seems to be picking up, or don't reduce it fast enough when things slow down. But this average long-term thing is really what should be remembered as a sustainable inflation. We should not react to just data that comes in suddenly and have to raise interest rates. So that's I think the first thing. The other thing is that, of course, regulation, although there are bodies that are linked to the Bank of England and other organizations which do that regulation, they are actually reasonably independent. But there is, again, pressure from the governments to focus on growth. That is exactly what's going on here in the UK. So actually, in many areas, after the regulation we saw following the financial crisis, we've seen deregulation taking place, and there's almost competition between the various central banks across the world to deregulate slightly faster so that they can retain their position in terms of their attractiveness as a place to be doing business in, raise money in, lend to, and so on. And that can become a dangerous sort of race to the bottom.
And Robbie, what do you think?
Well, in terms of making central banks more accountable, I think you've got to look at the dynamic of what takes them away from accountability. Like all regulators, they can be certainly captured by an ideology as well as not just necessarily vested interest. I think you really got to look at the whole model of the Bank for International Settlements, the central bank of central banks, and how that becomes the forum for a cabal, if you want to call it that, where central banks can be captured. Now, our perspective, or my perspective, is from the work we've done here in Australia at looking at the influences on our central bank. And I can tell you, because our politicians are somewhat obsequious to the central bank, they don't question what influences come on the central bank from its tete-a-tetes at Basel. There was one politician recently in Parliament who did, Senator Gerard Rennick, and he asked for copies of the transcripts of the Reserve Bank's discussions at the Bank for International Settlements, and he was told in no uncertain terms that no, they are not publicly available at all. Now, only one person in Parliament, him, questioned that. Everyone else just goes along with it. So they accept that these things should be out of reach of the public and the politicians who, at the end of the day, own the central bank. And you've got to start looking at that and go, really? Now, Martin's referred to the fact that the bank has other tools, and this is also an experience here in Australia. We've got a central bank that keeps repeating as a mantra, we've only got one tool, we've only got one tool. But you're talking to the political party that in 2024 saved their other tools. It's in legislation in Australia. Section 36 of the Banking Act says that the Reserve Bank has the power to target inflation in other ways, including by credit guidance. It can say to the banks, stop or reduce lending in areas that are causing inflation and increase lending in productive areas that will reduce inflation. That's its power. It refuses to use that power since deregulation in the 1980s. And nobody says anything except in recent years, our party, Gerard Rennick was one of them in Parliament, and the Greens actually, the Greens political party, started questioning this, right? Why aren't you using these other powers on your books? And so once they started questioning it and it became an issue and we were reporting it, etc., that hang on, the Reserve Bank has more than one tool, wouldn't you know it, Mike, the Treasurer of the day, Jim Chalmers, conducted a review of the Reserve Bank, after which they announced that a bill that said we're going to repeal certain powers of the Reserve Bank, including Section 36 of the Banking Act, that said the Reserve Bank shows the Reserve Bank has other tools. Our party intervened, worked with parties like the Greens, and we actually stopped that. Those powers still exist on the books because we stopped that repeal going through. But why would the government do that? What government, would decide, this is now 2025, 2024, now's the time to get rid of this power that the Reserve Bank has always had, after it came under scrutiny, right? And that tells you something about the way the politicians think. They're not inclined to hold it accountable, but our party is.
Martin, okay, let's go down a couple of notches. How do we make the banks, just the banks, more accountable?
Well, what are the banks there for? And we're talking here about, obviously, banks that lend and take money in and then lend it out and all those things. And also, of course, they have a payments responsibility too. Now, let's think about lending first. In the last 20 to 30 years, there's been a massive shift away from lending to businesses, particularly small businesses, and lending for property. 2/3 of lending amongst the major retail banks in Australia and in other countries too. Very high, but in Australia, very, very high. Very profitable, of course, very low risk lending. So from a shareholder perspective, it may make sense. But from an economic perspective, it makes no sense. Why? Because it simply blows house prices up. And if you compare house prices with average incomes in Australia, they're astronomically out of kilter at the moment. People have to just borrow so much more. So banks have been lending to housing in a way that is irresponsible, looking at the long-term development of Australia. So that's the first thing we need to think about. There are some changes that we could make there. The second is, on the issue of payments, of course, banks have actually been very, very careful to drift away from cash. Oh, too expensive. Nobody's want to use it. We'll go digital. Why? Because, of course, they want the digital information on digital transactions because that can be monetized and it's meant to be cheaper. Except, to me, cash is a central part of what banking is about. And so, to my mind, cash needs to be there. We discussed this the other day. Cash in a crisis is critical when the power goes off, and it's about freedom. And in regional areas, you got to have it. The third point is, if you look at the consolidation of the banking industry, and it's interesting, the regulator, APRA in Australia, said some time ago, we want a smaller number of bigger players because it's more beneficial from a financial perspective, financial stability perspective, but also, of course, it's easy to regulate. We have reduced competition in the banking sector to the point where there's almost no competition. Take away branches too, go digital, all of those things. So that's what are some of the things that are actually need to be changed. We need to think differently about what is banking about. It should be about enabling businesses, particularly small businesses, to thrive and prosper, for consumers to get the credit that they need, but not in a way that allows banks to make super profits, which is what's happening in Australia and elsewhere, particularly from housing, because housing lending is just inflating the economy. It's a black hole. It's sucking more and more of the economy in. It's making us less productive as an economy and less, therefore, protected from the future. When we get a housing crash, as we will, it's all going to come tumbling down.
And Vicky, can you just tell me what you think as we're trying to push buttons here? They're not working at the moment. We'll try this one instead, and that's not working either. But never mind. Can you just tell me what you think about how we
Well,
can make
yes.
the banks more accountable?
Well, the first point to make is that it's absolutely true, as Martin has been saying, that we have seen a lot more consolidation in the banking sector. Of course, we've had a lot of competition from fintech, sort of non-banks coming in, so we need to perhaps discuss that as well. But the interesting thing is that banks have become, partly because of what happened in the financial crisis, larger. So there's been a lot of banks that failed and some that have been absorbed by other banks. So we've ended up with a sort of smaller number of banks that do the traditional thing that we expect banks to be doing, including having branches on the high street. Here in the UK, those branches have been cut back very significantly. But what you find is that this huge consolidation is also happening in places like Europe, which had a huge financial crisis as well. So one of the issues we're having right now is that we're living through this legacy of post-financial crisis, where indeed those trends have in some ways been multiplied quite significantly in terms of their force. But it is absolutely true, again, as we've just been hearing, that quite a lot of what the banks do not necessarily add hugely to social welfare. And it's interesting when you look back at the financial crisis that Adair Turner here in the UK, who used to run the Financial Services Authority at the time of the crisis, said that actually quite a lot of what the banks were doing was socially useless, which is interesting in terms of engaging in sort of trading activities and others. Activities which weren't really adding anything very much, and he cautioned against that. And it's absolutely true when you look at what the big investment banks have been doing, or any with any investment subsidiaries, if you like, because certainly in the UK we try to separate investment banking from retail banking just to avoid perhaps some of the risk taking that used to take place, which was perceived to be one of the reasons for the financial crisis. What you find is that those trading divisions have done incredibly well because of the volatility that's been taking place in the capital markets. So a lot of trading going on, the tariff situation, President Trump's different pronouncements on a daily basis, what's going on now on the energy front. A lot of money is made, which, what happens to it? Is it getting redirected to productive lending? Big question mark. And what we find certainly is that both in the UK and in Europe overall, lending to SMEs is being stifled to a considerable extent. And even as a result, actually, even in the productive sector, we find concentration taking place because the bigger firms can withstand those issues that we're all facing a lot better than the smaller ones. And of course, what they're doing now is they turn a lot to equity financing, private credit, in order to grow further, because the banks are very, very reluctant generally to lend, even though things are being eased a little bit in terms of the expectations that central banks have in terms of regulation for them. So those are the trends at present, not helping the real economy particularly, is I think the overall conclusion. So I agree with the previous comments.
Yeah, on the last week when we were talking about this, Robert, Catherine thought that that the banks are there to make money. They're a business, we really can't argue with that. They are there to make money. They are the first to. I mean, even if it's making some money, but not a huge amount, they're quite willing to just get rid of those services. Do you think banks have a moral responsibility? I mean, again, we were reminded that they are there to make money, but I think they have a moral responsibility to make sure that they look after their local communities. And if you see banks throughout Australia in the smaller communities, they're just heading for the hills, leaving those communities high and dry.
I think governments have a moral responsibility to make banks behave themselves. I think it's an absolute mistake to invent an airy-fairy concept of social license and leave it up to banks to decide what that is. This is a question for government. It's government that's dropped the ball here. It's government that went down the neoliberal path and embraced the whole concept of deregulation. I firmly think two flagship policies to make the banks accountable again is Glass-Steagall, of separating banks fully, not through the UK ring fencing model, but full separation between investment banking and commercial banking, so that the banks that hold the people's deposits in trust are not allowed to have any exposure to the high risk, high profit banking that the banks love to do, because that's where they make all their profits. And then the banks that are behind the Glass-Steagall wall, they put their money into, they direct their credit into the real economy, right? Into the home loans and business loans, etc., of the real economy. It was an excellent regulation when it was in place. It was an elegant regulation. It's a firewall like Glass-Steagall. It's very simple to enforce. It's hard to find loopholes in it, and that's why the banks wanted to get rid of it. My experience with the UK banking system was from post the global financial crisis, visiting the UK quite a few times, talking to UK politicians who about Glass-Steagall and bringing it back, and that eventually is what turned into ring fencing. One of those was Margaret Thatcher's Chancellor of the Exchequer, Nigel Lawson. Nigel Lawson oversaw the Big Bang deregulation in the 1980s, but after the global financial crisis, he was one of these leading, political experts and bankers around the world who said that was a mistake. We've got to bring back that divide, and it never happened. Instead, the Bank for International Settlements, under Mark Carney's leadership, actually cooked up bail-in as an alternative to making the banks behave themselves again through Glass-Steagall. And we got this bail-in policy instead, which is a way to put the customers on the hook to pay for the bank's trading losses if they happen. And that would be a disaster, and it is a disaster where it's been implemented. But the other one is, again, responsibility of government, go back to national banks. And I did, as I said, I heard your discussion last week, and even your guests from the Institute of Economic Affairs, in arguing that banks don't need a social license, she said, if you want that to be done, do it through bring back the Commonwealth Bank. And I had to say, I agree with her, bring back the Commonwealth Bank. Let the government go back. In Australia, we had public banks going back to the mid-19th century in the form of state banks, and then we had the Commonwealth Bank from 1912. By the time the Commonwealth Bank was privatised in 1996, it had been in existence for 84 years, and it was the last of the public banks left. And so we had a century and a half of public banks. We've had 30 years of no public banks, and without having an institution that is there to serve the people first and foremost, that will make a profit but is not there to make a profit. But it does, because it does provide a service, that sets a standard that the private banks have to compete with. Without that, there is no competition, and we turn these big four banks into an oligopoly that has literally no competition. They look over each. They look over each. They don't have to collude very much. They just have to look over each other's shoulder and see what they're doing. And the Reserve Bank is there to prop them up, as is the bank regulator APRA. And like I said, the consumer in Australia has well and truly suffered. So the Citizens Party, our whole existence, has fought for a national bank. Bring back a government bank that can both provide a service to the public and also play a development banking role to make the long-term investments that's for the good of the nation. And just by doing so, sort of like create ballast, if you will, or such a dominant area of the financial system that is well looked after, that you can let the banks do what they want if they want. But if they don't provide a service like they're doing now, they will lose all their customers to the public bank. And that would be more, that competitive pressure would do more to make them lift their standards than all the regulations governments can come up with. And so we've been pushing that quite hard, and hopefully it comes off.
Can I come in a second?
Yes, please.
And say that, it's interesting, this idea, but, and going back to a public bank, we, of course, here in the UK did have a public bank, in the sense that after the financial crisis, the Royal Bank of Scotland, for which I used to work, but not then, was nationalised, basically, 100%. And it could possibly have played that role, but during that entire period when it was in public hands, it didn't. It behaved like a normal bank, expecting to make sort of profits so that it could be resold. And then it was sold at a loss. by the government. So a huge opportunity, I'm afraid,
Yeah.
was lost. That we now have something called the UK sort of business bank. It's
Mm.
not terribly highly capitalized, but it can't play that role at all.
Martin.
Yeah, so the interesting thing here is when you think about the current state of play, pretty much everyone says it's not working really well. And so it's fascinating to me that now there are some different models. There are models where we need to say, no, we need more competition. We need to let the banking system fly free. So let's deregulate further. That's a philosophy that's really around at the moment. There's another philosophy that says, no, actually, the solution is to give central banks more tools, digital tools. So central bank digital currency, that's the way to solve the financial system. But I actually want to underscore that for me, this idea of having a banking system under public control, effectively, that's designed to support the interests of ordinary people and businesses rather than just excess profits to the small number of shareholders. And by the way, if you look at the shareholders of Australian banks, the bulk of revenue generated through dividends goes overseas, not into Australian pockets at all. So the hyper competitive model doesn't work. The central bank digital currency, let's give you more digital tools model, I don't think is going to work. But this idea of bringing back control and ownership to the people, with control, of course, through the parliamentary systems and processes, and with a tone here not of maximizing profit, but maximizing economic good for ordinary people, seemed to me to be a really powerful model. But it's so different from what we've seen over the last 30 years. And the last 30 years has failed in terms of the economic outcomes for ordinary people. Most people's real incomes have not grown. The economic standards that most people live under are less good than they were. And everybody in positions of power at the moment, from central bankers through to politicians, want to do more of the same rather than look for something different.
Martin, did you see that movie? There's two, one and two, The Bank of Dave. And that it's a very cute movie, and it's about a small bank for a very small area and some of the trials and tribulations. That's not so far from what many are touting, is it?
I think community banks is a really important part of the story. In fact, I did quite a lot of work when I was actively involved in consulting in Australia with community banks. And what was fascinating about that was those communities valued the direct interaction with the banks and the bank manager. And if you go back 20, 30, 40 years, you would have a local community leader in the financial area that would effectively be the bank manager, along with the vicar and the doctor. And they would know people in the local community, and they would be able to provide financial advice, yes, loans, yes, but be part of the community, a pillar of the community. And, the Bank of Dave, which was based on pretty much fact, although a little bit of a tweaked fact. But what was interesting was how the big players pushed against the Bank of Dave, did everything to undermine it because it didn't mesh with their philosophy of what banks should be, big, profitable, never mind the small guys, relative to what the Bank of Dave was doing. And that's really the critical point. You have to have a banking system that is actually supporting the interests of ordinary people, ordinary communities, small businesses. That is the nexus point. That's where you start rather than where you end up. Because if you do that just down the road, it never gets touched, and that means that the banking system fails in its clear mandate.
Vicky, what do you think about did you see the movie Bank of Dave? I've seen the first one twice, the second one once, but I thought were very, very good. And it's what many are touting, aren't they, at the moment?
Well, I think what we have discussed before, and I'm thinking about your program last week, was the fact that because of the restructuring that has taken place by banks and the use of technology, we've ended up with the loss of local understanding of what it is that businesses need in order to grow, and even for day-to-day managing of their operations, and that has happened unfortunately, all across the Western world, and that is a problem. You do still, of course, have banks that are more local in the state, in various states in the US. And you've seen actually some of those going under, so and needing lots of support. So yes, of course, we do want smaller banks that are sort of specifically looking at how they can help particular communities, but they also have to be properly regulated. We had a period of that also in Germany with the Landesbanken. The odd one of them has not done particularly well either, because they became too entrenched in some of the companies, which then didn't survive whatever shock they may have gone through. So yes, there are benefits, but also you want to make sure that the finances of that particular organization continue to be positive. But of course, you've seen examples in the developing world with microfinance, which is given to in places like India, where it all sort of started and has been copied in a number of other places. All this is good, but you still need to regulate them in a sensible way and make sure that you don't have sudden shortages of liquidity in that area. So and suddenly everything sort of stops. We've seen that happen before. So yes, of course, it makes a huge sense to move in that direction, possibly. But there is indeed concern that what is happening right now in certainly the UK, but also we see that in Europe, as I said earlier, is that it's SMEs, smaller firms, that suffer because that type of understanding is not there. And actually, despite the deregulation which is supposed to be taking place, what we find is that banks prefer not to lend to small firms unless there is big collateral which is being offered, which of course could be a complete killer, and in fact keep their money with the central bank, which in the case of the UK offers, because of high interest rates right now, quite a good return. So the reserves are being very handsomely paid instead of being recycled to help the community. And I think that is a serious problem and needs to be rethought.
Robert, in Australia, the Bank of Dave would have been swallowed up by now by one of the big four. For smaller banks in this country, I mean, and if you look at, I think Bendigo now are owned by, who owns Bendigo? Is it ANZ or, anyway, I think they've all merged with other banks, or
It merged with Adelaide Bank.
Yeah, but they've all, the big ones are becoming bigger and the small ones are becoming extinct. How do we protect the smaller ones? Because I do think there's merit there to have smaller branches, smaller banks looking after the communities. And I think Martin said to do some economic good. I don't know if I could mention good and bank in the same sentence, but anyway, we'll endeavour to do so. Waiting for a bolt of lightning to come down from the banking god. But I'm just thinking though, if we could get through the propensity and the enthusiasm of the big four to gobble up smaller ones, and we had banks of smaller branches, or smaller banks, not branches, just banks around Australia, they still had to do the right thing, dot the I's, cross the T's and stuff, but did what Martin suggested and have that economic good. Is there a chance in Australia of that happening? Or is it just going to be the big dinosaur walks over and gobbles up all these smaller banks, and then, no matter how hard you try, you're going to have just four biggies?
Well, there's a chance of it happening if we can muster the political will in Parliament to make it happen. I'm really glad Vicky mentioned the nationalisation of the Bank of Scotland. And I remember how shocking that was to me at the time.
The Royal Bank of Scotland.
The Royal Bank of Scotland. Sorry, that's right. The Bank of Scotland actually had a role in one of our banks over here. Now, the Royal Bank of Scotland, I remember how shocking that was at the time, that the British public bailed it out and then had no say in its actions. And in fact, it went on to have this horrible program of abusing small businesses while under state ownership. And there was just no philosophy in the UK that said there should be some public good imposed upon these banks. And that's what we've got to change. I do think there is a model in the world that needs to be looked at, because it is successful in supporting small banks, and that is the state of North Dakota in the United States. North Dakota has more banks per capita than any other state in America. And what they also have that's different than every other state in America is they have a state bank. It's the only public bank in the United States, the State Bank of North Dakota. And that state bank supports the existence of those small banks. And it's the state that has the best finances of any state in the United States as well. So this model should be looked at, because if you could replicate it, so that you have a safe but diversified banking system out there, you would want to do that. In Australia, there's an organisation called the Regional Banking Investment Alliance, where the tiny banks in the regions have got together to put their hand up and say, we want to provide a service to towns that the big banks won't. They're trying to lobby the government at the moment to impose a levy on the big banks that don't want to provide a service that goes to the small banks. And in fact, it's the total amount of the levy that they're asking to be raised is $150 million. When you have a banking system here dominated by 4 banks who have 80% of the market, who between them make $40 billion, right? It is a tiny amount of money that small banks are asking for, but they reckon that they could provide something like an extra 500 to 1,000 branches just with a slight subsidy from that. And their argument is it's not really a subsidy, because one of their complaints, Mike, and you can imagine how frustrating this will be, these are banks that do want to serve their communities, but there's consumer habits in Australia that make us very sticky to our banks. So these towns will use these small banks to do things like cash services, which are expensive to the bank to provide. But when it comes to borrowing money, they always go to the big banks that have abandoned the town, right? And these banks are saying, please bank with us, actually borrow from us as well, so we can get some of the profit and provide that service. Mm-hmm. What we would do as our policy is, we want to bring back a public bank with a retail arm in post offices. Now, there's 2,500 regional post offices in Australia. There's 4,000 total post offices, which is more than all bank branches combined. If you had a public bank with a retail arm operating post offices and a commitment, like the Bank of North Dakota, to actually support the private small banks, let the big banks behave the way they want to behave. In fact, encourage them. Don't change anything about your behaviour, big banks, if you think it's so valid. We're going to create a new kind of dynamic here. You think yours is so great, you keep doing it. And let's see who wins in the actual market. I reckon you'll see some rapid behavioural change very, very fast.
Mm. Martin, where is crypto going? Becoming more and more regulated. It is. I mean, I just thought I'd throw in a match into the fuel. Now, it might be safer, but people still can't get out of the centralised system, can they?
So the interesting thing about crypto was originally sold as the complete antithesis of the banking system, right? You know, completely self-autonomous, completely devolved, no centralized control, except that the crypto industry has now been completely hijacked by the big banks. And if you look carefully, they are taking more and more control. They've basically done exactly the same games as they've done before. They've now created a whole bunch of derivatives around Bitcoin and other things, and they're getting lots of ETFs and all of those things. They're making huge amounts of money on the way through. So effectively, the philosophy that crypto represented, which, by the way, the blockchain is a really interesting function and certainly can provide alternative mechanisms rather than actually lots of centralized ledgers and all those things. So that's good. But the way that it's been actually rolled forward, it basically means that you've got the major financial systems now connected very strongly with the world of crypto. Plus, of course, in the US, with the Genius Act and some of the other things that have happened, you've got this whole issue now of essentially the US saying we are going to, lead the crypto world forward, and it's now very much government policy. And if you look carefully, a lot of people in government have, funnily enough, made a lot of money on the way through. So the whole profit motive is there now. So to my mind, you've got a major issue about what is crypto for there. And the other point is, of course, the value of crypto has dropped dramatically from its highs, although it's come up more recently. Highly unstable, highly volatile. So this, to my mind, is not the solution that will actually take us to a good place when it comes to the evolution of the financial system. It's a bit of an aberration, but the DNA of crypto, particularly around the blockchain, and how that could be used to simplify bank transactions and reduce the transaction costs, to me, are very interesting. And that's where the focus, I think, should be.
Vicky.
Well, yes, I agree with that.
But of course, if people lose some of their faith in, fiat currencies, the ones that we are so used to, then crypto has a chance of increasing its use. And the interesting thing is, of course, when you look at what's going on in the US, where it's becoming sort of acceptable and the regulators are sort of giving it a seal of approval, but of course they have to meet various conditions for that. So it becomes possibly like a sort of traded currency, an investment vehicle. So different rules apply to all that. So that in many ways legitimizes it. But it is an issue as to how it's going to be part of our overall financial system for the future. And the move by central banks to digital currencies is one area perhaps that suggests that the governments are also trying to, or certainly the central banks, to have a piece of the cake, but also make sure that perhaps central bank digital currencies, because they are controlled by the central banks and therefore have even greater legitimacy, might in fact be seen to be alongside crypto and perhaps more attractive for individuals, while crypto is coming under more regulatory control. So it's going to be a mix of things for the future. I think there's a big question of what we've just been hearing about, from Martin and others, of how the whole regulatory environment will move and the percentage that each of those developments is going to have in the overall financial system. But the really interesting thing for all of us, since we're talking about what it means for growth in businesses, is how that money is used. Are we going to be seeing a lot of investments which are backed by cryptocurrencies going directly into helping businesses? So far, there hasn't been huge evidence of that, I'm afraid. So it's used more as a sort of means of exchange, perhaps, and shielding oneself against whatever else one is worried about. But it's really when it does begin to be part of the whole system. And my worry is that, particularly if we move to government digital currencies, we're going to see something similar. So banks will not be intermediating in the future, if that is how we're going to be moving for that big chunk, which is owned by individuals in digital currencies, because of course the way in which the financial system works is it takes deposits and then converts them into lending. If that doesn't happen, who's going to be the lending? So yes, we've been talking about maybe more public ownership of banks and lending, but is the central bank going to become a lender in the future? How is all that going to develop? And that's the big question mark in all these areas which are now changing in front of our very eyes, but without any clear landing point, I think.
Robbie, you're very aware of the CBDCs, especially on financial freedom or just freedom, the surveillance, that gives the government this great control over everybody. What's your thoughts on the CBDCs, and should we go back to just trading food?
I'm actually quite interested in the development of probably what you might call the wholesale CBDCs for use between central banks, which has grown up by banks being motivated to get around US sanctions, etc. And it seems to me that's probably a perfectly legitimate method, because it's all about just establishing trust in the international financial system and financial transactions. But from a domestic standpoint, I think they're a real disaster if governments bring them in. Though there's at least one country, I can't remember which one it is. You can program these things, quite finely, and maybe at least on paper claim, oh look, all the protections for you are programmed in there. But then you got to be able to trust your government if you believe that when it promises you all those protections are put in there. In Australia, when CBDCs first started being talked about around 2019, our bank, the Reserve Bank, said the Reserve Bank of Australia will not maintain both a central bank digital currency and cash. It's one or the other. I remember thinking, well, who says it's up to you? right? This should be the government that makes a decision like that, not you guys. But nevertheless, that's what it said, and so that shaped our view. Look, no way are you going to get rid of cash and replace it with a central bank digital currency. There are practical reasons why it can't work. Australia is not a country that can have electronic transactions everywhere. It just can't. But then just from an individual freedom and privacy standpoint, you don't want to go. You're going to replace the most reliable form of transacting under all circumstances in a totally private way with the most surveilled possible type of currency that isn't reliable in all circumstances. That's just insane. So we're dead set opposed to any move to bring that in. And I think we've made a lot of progress in recent years, Mike, on the cash debate. As Martin mentioned last week, cash use in Australia has actually gone up, and it's gone up. I did a very lengthy live stream show with Martin many years ago, I think around 2019, where we introduced this concept with cash: use it or lose it. And we've been plugging use your cash because the banks want to take it away from you. And the message is getting out there for sure. Politicians now that in 2019, 2020, we're all saying, oh yeah, this digital's the way of the future. They're now tripping over themselves in Parliament to express their never-ending dying support for cash, right? So if they decide to go down this path, or let the central bank go down this path, they're going to have a huge fight on their hands.
Martin, what do you think? Because I think if government wants, government generally gets.
So the thing to understand is programmable money is what's actually in the background here, right? And if you actually have a central bank digital currency, so for example, every individual has an account at the central bank, well, that means that the central bank can then put money into your account, which you can then access digitally and then spend it. But they can also do interesting things like, well, if you don't spend it in the next month, the value of your digital currency will go down by however much they want to do it. Or if you want to spend money in this particular area, you can do that. But if you want to buy something over there, we're not going to let you do that. So the issue I've got is programmable money and digital control, and therefore security, privacy, all of those things need to be a part of this debate. And at the moment, I don't think that there is sufficient understanding of the risks that are actually being represented by this idea of programmable money. Interestingly, also, the Federal Reserve, when they did a big review, made the comment that using central bank digital currencies gives us a whole bunch of new monetary policy tools, which basically says, well, we've stuffed up the ones we've got, so we're going to get more, and that gives us more control of the economy. I have a worry about that for all the reasons we've discussed earlier on. And then just circling back round, if you talk to ordinary people, and I survey ordinary people, it's fascinating to me how cash has now come back into vogue. And a lot of young people are using cash to budget, to actually control their finance and their spending, because the digital alternative, you just wave the card and pay, you don't get a sense of value. You don't get a sense of actually understanding what the value of money is. So actually there's a really good reason why cash must be part of the solution into the future, because it gives you the opportunity to understand the real value of money, and you make more responsible decisions rather than just saying, so I'll just swipe it and get a bit more and then get paying a lot of interest. So it's pretty critical to me.
Vicky?
Yes, well, I have to say that I agree with quite a lot of what's just been said by both our speakers here. But the interesting thing is that the Bank of England, as I'm sure Martin would know, has been looking at this for quite some time, and seems to have lost its enthusiasm for it, for all sorts of reasons. But their idea was that you get just a certain amount per person, it's like £20,000. Of course, the average deposit of most people is a lot less than that, that you can use as sort of part of digital currency, and the rest can be cash and everything else. But people are already using their cards, and they're quite happy to do a bit of cash, a bit of digital currency, if you want to call it that. It may cost them a bit, but not always necessarily, and the costs are passed, of course, to the retailers who get that card payment from you. So maybe if there is more central bank digital currency, you're not going to have that retailer's extra cost. Maybe they will It will reduce perhaps a little bit of the overall inflation in the economy, maybe. They seem to certainly have cooled quite significantly. There have been concerns about privacy, of course, but also how the system might run. And do we really need an extra complication given everything else we have to deal with right now? And of course, the UK is in a bit of a political mess, as you know. Europe wants to move to digital currency for completely different reasons, because a lot of the payments done by credit cards and also debit cards go through MasterCard and Visa, which are, of course, US companies. So they want to change that a bit. So I think the digital euro is in a way sort of part of this. So that's basically, where we are. So there are all sorts of reasons for thinking about or not thinking about digital currencies. They vary from place to place, and it will be interesting to see where we end up. And I think it's all still very open, and any pressure that's being put on central banks to sort of think about it in a more rational way would probably be welcome.
We are running out of time. We've gone over time again. Sorry about this. Final question, Robbie. Cash v digital currencies. Your thoughts, and who's the winner in your mind?
Cash is king. Always cash. Look, I spent most of all of 2023 and half of 2024 travelling around Australia with a Senate inquiry into bank closures in regional towns. And last week you talked about one of those in Coober Pedy. That was one of the worst cases. Probably the second worst case we came across was Queenstown in Tasmania. Last year was there was one bank left on the whole west coast of Tasmania, and it was Bendigo Bank, and they shut it down. Interestingly, by the way, the banks admitted early on that they didn't shut these branches down because they weren't profitable. Profitability was not one of the factors. These banks had decided to move to a digital model, and they were forcing the market, right? They were saying to the market, you're going to go digital whether you like it or not. And that's why it led to a big backlash, etc. But you go to these places, Mike, there is no option of digital. It's a joke. The town of Junee in New South Wales, which is about an hour north of Wagga Wagga, so it's not totally in the boondocks, Junee. That's where one of the branch closure hearings were. They made the point that the Optus outage that had happened in Sydney a few months earlier, where the whole city shut down for a day and it was total chaos in Sydney, they said that happens here 3 or 4 times a week, right? And the people in pinstripe suits in boardrooms at the Reserve Bank Payments Board and the private banks who have this fantasy that we can push people into this digital economy, they're not out there in those towns seeing the reality of what it's like. The only currency that is reliable under literally all circumstances, all conditions, is cash. And it's just crazy, totally crazy to move away from it.
Martin, cash v digital currencies. In the blue corner we have digital currencies. In the red corner we have cash. Which has the knockout punch?
I actually think both is good in different circumstances, right? What you don't want to do is to be forced to use one versus the other. To my mind, freedom is to choose the way that you want to do it. And I think that cash will continue and must continue. But I also think some of the digital alternatives do offer some significant advantages in terms of convenience, extra information if that's what you want to manage your finances. But it should not be determined by a third party, whether it's the Reserve Bank or whether it's the government. We need to let the flowers bloom. And I actually think that the best answer is cash and a bit of digital. Over time, it'll evolve, it'll morph. We'll probably see new things, but don't throw the baby out with the bathwater. Cash is crucial. As Robbie says, cash is king.
And Vicky, you have the final say.
Wow. Well, I agree with Martin and Robbie that cash is absolutely important. What really surprises me is that the regulatory authorities have allowed the move to lots of firms saying you can only, when you walk into a shop, you can only pay by card. Cash is a legal tender. Yeah, they have to accept it. How they've allowed this to move in a way that prevents the normal citizen of paying in cash if they've got some cash in their pocket I do not understand it. And the whole issue of bank closures as well, is the regulators that have allowed this to happen. There was a bit of a discussion here in the UK about making sure there is a branch within whatever it is, 15 minutes of you walking, and the post office was going to be coordinating it all if there wasn't a branch. Well, a lot of that has disappeared, it seems, in practice. So you are left cashless. Which, of course, is an issue in terms of budgeting, young people understanding about this, but also people who cannot have access to digital. So, yeah, I think we probably are in danger of being violently agreeing with each other on this program.
Shocking. I can't believe we're doing that. Robbie Barwick, thank you so much for being part of the Protagonists. If somebody wants to find out more about Robbie Barwick, I'm asking a leading question here, but how do they do that?
Well, you can follow me at Robbie Barwick on Twitter and variations of that on most of the platforms, TikTok, Facebook, etc. But citizensparty.org.au is our website, and we have a show on YouTube, the Citizens Report.
Fantastic. I was just thinking, popped into just to have a look at if they had any. We had a story last week on one of the shows about this. Timboon Distillery making magnificent scotch. I popped into the bottle shop because I always pay, just tap. I'm one of those terrible people. And the guy walked up to me and says, "You're the guy that buys this Chivas Regal, aren't you?" I said, "Yes. We overcharged you by twice and we'd like to give you the money back." And I wouldn't have picked it up. I would not have picked it up. Now, if I had cash,
wow, you would have known.
So I thought, wow, there's an honest person out there. So, my local bottle-o, good on you, mate.
Scotchmen are very honest.
He was. And he said, "Do you want to get another bottle or would you like to have the cash?" I was with the wife. So we decided cash is king.
Yeah.
And he put the money back for me, and I'll wait till she's not looking. I'll pop down to the shop again. Martin sound like a good husband, a normal husband. Martin North, Principal of Digital Finance Analytics. How do they find out more about you?
Well, I've got a website, digitalfinanceanalytics.com. I have a YouTube channel called Walk the World. I make daily posts on finance and related issues, all the stuff we've been talking about today. And you can also follow me on Twitter at DFA_analyst.
Fantastic. And Vicky Price, where do they find you?
Well, I have a website, but also at Real Vicky Price, which is my for X, for Twitter. And I've written quite a lot of books, so thank you for putting the Mismanaged Decline, the latest book, when you showed me earlier, which is talking really about quite a lot of these issues, including what the financial sector did during the financial crisis and how we need to watch out for that a lot more. But also, I mean, just one thing to say, I've written quite a lot of books, and one of them was called Greekonomics, and because I'm originally Greek. And I remember my publisher at the time saying, "This is really strange. We just got 300 book order from a bookshop in Melbourne." And I said, "Yes, of course, it's full of Greeks. It's the sort of largest city outside Athens, populated by Greeks." So, so I just thought I'd mention that. And so I had to explain that to them. So I'm delighted.
They're all my landlords, Vicky.
Very funny.
But I hope they can buy Mismanaged Decline as well, although it's more about the UK. So anyway,
and Melbourne is a very strong Greek city. Just one final thing, nothing to do with this at all. Who will I ask? I'll ask Robbie. Robbie, which is the second largest Hawaiian city in the world?
Oh my goodness. Hawaiian or
No, Hawaiian. Which is it's Vegas, Las Vegas. They love gambling. Anyway, I just thought I'd mention that.
I thought you might have been meaning Polynesian, in which case it's Brisbane, Sydney, or Melbourne. Take your pick.
No, second largest is actually probably the largest. They'll hop on the plane off to a weekend of gambling. So anyway, off the topic there. Sorry about that. Thank you so much for being part of the Protagonists. Martin North, Principal of Digital Finance Analytics. Vicky Price, Economic Advisor, Board Member, Centre for Economics and Business Research, and a great author. And Robbie Barwick, National Chairman of the Australian Citizens Party. More Protagonists tomorrow on The World Today. Thank you again. Be kind to yourself, be kind to your neighbours. And the husbands, don't buy scotch without telling the wife. You'll be in deep doo-doos.